Hello everyone, welcome to your Algo Lab. If you're curious about what the savvy investors on Wall Street are doing, this episode is for you. Today, we're taking a deep dive into the latest filings from some of the biggest hedge funds and institutional investors. We'll break down their recent moves, highlight their biggest bets, and uncover the trends that could impact the market. So without further delay, let's get started. A 13F filing is a quarterly report that the US Securities and Exchange Commission, SEC, requires from institutional investment managers with at least $100 million in assets under management, known officially as Form 13F. These filings provide details about the equity holdings of these institutional managers, including hedge funds, mutual funds, and pension funds. These details can be accessed through the US Securities and Exchange Commission's SEC EDGAR system, which stands for Electronic Data Gathering, Analysis and Retrieval. Here are some key points about 13F filings. Institutional managers must submit 13F filings to the SEC within 45 days after the end of each calendar quarter, resulting in 4 filings per year. 13F filings disclose only long positions in exchange-traded stocks, shares of closed-end investment companies, and ETFs. Certain convertible debt securities, equity options, and warrants listed on the official list may also be reported. These filings only cover holdings of securities traded on US exchanges. Investments in markets outside the US are not included. We should understand that 13F filings have 2 main limitations: missing information and untimely data. First, 13F filings do not include a fund's short positions or international investments. If a fund is primarily net long, the filings can be helpful, but for net short strategies, they may be misleading by only showing long positions. Additionally, international positions are not included in these filings. Second, the data is often untimely. Institutional managers have 45 days after the quarter's end to submit 13F filings, so they may reflect decisions made months earlier. This delay is especially significant for firms which frequently trade and whose filings may no longer represent their current positions. Scion Asset Management was founded in 2013 by Dr. Michael J. Burry, a well-known investor who famously predicted the 2008 financial crisis by betting against the US housing market through his previous firm, Scion Capital. Burry's success in shorting subprime mortgage bonds was highlighted in Michael Lewis's book, The Big Short, and its film adaptation. After closing Scion Capital in 2008 to manage his own money, Burry re-established his investment business with Scion Asset Management, focusing on value investing, deep fundamental analysis, and contrarian bets. The firm manages a diverse portfolio across equities, options, and alternative assets. Now let's look at Scion Asset Management's 13F filing in detail. By compiling 13F filings, we can construct Scion Asset Management's equity portfolio. Let's begin by examining the sector allocation. Here we present the historical sector allocation from the first quarter of 2015 to the most recent filing in the second quarter of 2024. The allocations are displayed in a histogram along with the underlying percentages. Scion Asset Management's sector allocation varies widely from quarter to quarter, with some periods showing no equity holdings at all. Currently, the consumer discretionary sector represents the largest portion of the portfolio at 40%. The financial sector is the second largest at 19%, followed by healthcare at 16%. Next, let's examine the individual stock positions, starting with the top 5 holdings in Scion Asset Management's equity portfolio. These top 5 holdings make up 74% of the portfolio, indicating a high level of concentration. Here we'll plot the individual stock prices, adjusted for dividends, alongside their holding positions in number of shares. We'll also compare each stock's annual total performance with its corresponding industry, together with their differences for comparison. As of Q2 2024, Alibaba makes up 21% of Scion Asset Management's equity portfolio. The fund has bought and sold Alibaba several times in the past, but since Q3 2023, Scion has steadily increased its position in the company. Alibaba is not the only Chinese stock in the top 5 holdings. There are 2 more, which together account for 45% of the portfolio, reflecting Scion Asset Management's bullish stance on Chinese stocks, particularly Alibaba. Alibaba operates within the consumer discretionary sector and the broadline retail subsector, alongside competitors like Amazon and PDD. The company has been significantly affected by China's economic slowdown in recent years, resulting in substantial underperformance compared to the sector. Shift 4 Payments is the second largest holding in Scion Asset Management's portfolio, accounting for 14% of its equity investments. The company went public on the NYSE in June 2020, raising $345 million in its IPO, and was among the few firms to do so shortly after the onset of the COVID-19 pandemic. Scion Asset Management established its initial position in Shift 4 in Q2 2024. The company operates in the financial sector, specifically in the transaction and payment processing services subsector, alongside major competitors like Visa, MasterCard, and PayPal. Since its IPO, Shift 4's performance has shown significant variation compared to the broader sector. Molina Healthcare is the third largest holding in Scion Asset Management's portfolio, representing 14% of its equity investments. The fund established this position in Q2 2024. Molina's stock performance has been impressive, but has shown considerable variation compared to its sector. The company operates in the healthcare sector, specifically within the managed healthcare subsector. The healthcare sector is generally considered more defensive, often outperforming during economic downturns, as observed in 2015, 2018, 2020, and 2022. Next is Baidu, which makes up 12% of the portfolio. Scion Asset Management increased its position in Q2 2024. Baidu operates in the communication services sector, specifically within the interactive media and services subsector, alongside other major players like Alphabet, Meta, and Tencent. The communication services sector tends to perform well during periods of economic strength and underperform during downturns, as seen in 2015, 2018, and 2022. However, 2020 was an exception, as the sector benefited from the impacts of the COVID-19 pandemic. JD.com is the fifth largest holding, making up 12% of the portfolio. While Scion Asset Management has traded JD.com several times in the past, it has steadily increased its position since Q3 2023. Similar to Alibaba, JD.com has been impacted by China's economic slowdown in recent years. JD.com, like Alibaba, operates within the consumer discretionary sector, specifically in the broadline retail subsector, alongside companies such as Amazon and PDD. The consumer discretionary sector shows mixed performance during economic downturns, experiencing negative returns in some periods like 2018 and 2022, while outperforming in others, such as 2015 and 2020. Let's review the reduced and sold out positions. Scion Asset Management reduced its position in JD.com by 31%, bringing it down to 250,000 shares. The holding in RealReal was also decreased by 29%, now totaling 1 million shares. Two-thirds of the portfolio at the end of Q1 2024 was liquidated. Let's examine the increased and new positions. Scion Asset Management increased its position in Alibaba by 24%, raising its total to 155,000 shares. The stake in Baidu was also increased by 88%, bringing it to 75,000 shares. New additions to the portfolio include Shift 4, Molina, Hudson Pacific, Olaplex, and BioAtla. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.